Hi everyone, it's Tom Gentile. Welcome to Tom's Trading Room, and I want to welcome all of our new subscribers to Tom's Option Tools. Glad to have you guys on board. Again, if you're brand new, one of the best places to start is right here on the page that I'm at, and you can get to it by clicking on Home after you've logged in, obviously, and come on down to get started. And at this point, we have videos and links that you can get started on creating folders, settings, trades. We even show you how to create darknet trades, and we can show you how to do back tests. Much more. Another place I want to point you to is come on over to Help when you can and go to the videos, because you'll see all of the videos that we have up, which show you everything from nearly every single one of these areas across the top of the screen. The how-to videos, they're all fairly short videos. We do have webinars out there too. But all of our videos are about 10 minutes or less, and they're designed to get you going in Tom's Option Tools. Now, let's get going with what's going on this week. So the big news this week, 270,000 jobs created on Friday. The U.S. employment data, much greater than expected. Unemployment at 5%. And the markets reacted exactly the way we expected them to react, and that is that really so much I'm looking at the bond market. The stock market's kind of interesting on its own. As you can see here, I've got a chart of the stock market right now, SPY. And it is down on the day, all right? It is Friday afternoon as I am taping this. It is down on the day. And you can see that we've had that nice run up in October. Last 3 days have been slightly down, all right? So the employment report did not affect the stock market that much, and I don't expect it to affect it. I expect it to actually be a good thing when the Fed raises rates. I think it's going to show stability in the U.S. It's also going to show that we're one of the few countries that actually has an economy that's growing. And people are going to want to put their money in the U.S. equity markets. All right, so that being said, the other thing that's really interesting is that just a few months ago, volatility, this blue line, was trading up here around 30. And now we've got volatility cut in half. What does that mean? That means option prices are about half off from where they were just a few months ago with the same amount of time going forward. All right, think of it as a half off sale on option premium. Let's take a look at the Treasury bonds, and I'm actually going to show you a chart of TLT. So TLT is the Treasury bond ETF. All right, this thing goes up when interest rates are going down, and it goes down when it's forecasting interest rates to go up. As you can see over here to the far right-hand side, that big move down once we had that report come out. We are sitting on support right now from back in September. All right, and if we blow through that support area, then I'm looking all the way back into July, to June and July, with support on TLT down around 115. All right, the more this moves down, the higher the likelihood we will be raising rates here in the U.S. by December. All right, so keep an eye on TLT. It's going to help us forecast whether those rates are going up or not. Next, let's look at oil, USO. And this is also going to show, because our dollar is strong, it's also forcing the oil markets to go lower. So now oil's kind of got the double whammy on it. Not only do we got a glut of oil around the world, but we now have a strong U.S. dollar that's going to force this price down in U.S. dollar terms. Right now we're getting very close to the support below 14. All right, the price of the USO is over on this side. The support of 14, we break through that below 14 support, and we're looking at 12.5, the low for the year on USO. This blue line, obviously, you see, is volatility. Volatility tends to go higher when the price of USO goes higher. Unlike stocks, where volatility goes up when stocks go down, the volatility in this picture goes up when this ETF rises. Next one I want to look at is FXE. That is the euro dollar. Euro dollar's also got a kind of a double whammy going on against it. Number one, we know the strength in the U.S. dollar today is not helping it out at all. But number two, there are some issues in Europe that are pushing the euro dollar lower against the U.S. dollar. And I expect that we see par on the euro by first quarter of next year. We're only 5 points away from that. And in the last 2 to 3 weeks, we've seen a 7-point drop in FXE. Now, putting all this stuff together, how do you make money with it? All right. Well, if you expect interest rates to rise, which would cause what? The stock market to maybe go up, maybe go down, but bonds to go down, euro to go down, crude oil to go down, and USO to go up. What makes money in a rising interest rate? I'm going to give you two sectors: banks, brokers. All right, take a look at this brokerage firm of a company that I used to work for, Charles Schwab, symbol SCHW. All right, let's plug Charles Schwab into the Tom's Option Tools, and you can see the big jump that it had today as the possibility of interest rates going up is getting higher and higher. All right, so Schwab's yearly high clocks in around 13.5, and that actually happened back in end of July, early August. All right, we're getting close to that right now. So if you believe interest rates are going up and you believe that Schwab could take out its old highs between now and the end of the year, this is an idea for you. Come on over and you're going to go to searchers and you're going to go click on single strategy. You're going to come on over to calls and puts. That's our call and put double finder. So you can see our call and put double finder. I'm actually going to go to Schwab, and I'm going to make sure that I've clicked on the lowest percent to double calls. Then it's just a matter of clicking on search, and faster than you can blink an eye, you already have possibilities down here that range from, these are all January 2016, perfect timing for the December rate hike, and you've got everything from a 33 to a 36 call. All right, now 36 calls kind of out of the money. You got probability stacked against you if you're looking at that. But come on down to 33 for a moment. $2.20. A 33, where the stock's trading right now, 34.05. So almost half of this is real value. Where do we need this stock to be in order for that $2.20 to be worth more? Well, take $2.20, add it on to 33, and we're actually looking at about $35.20, very close to the all-time high. We hit that all-time high. We could see 36, 36.5, 37 based on short selling or short covering, excuse me. If that's the case, then at 37, a 33 call is going to have 4 points of intrinsic value. So we're talking about a $2.20 option that could be priced at 4 if we hit 37 by year's end. All right. Again, you want to find out what we're looking at right now, log on to tomsoptiontools.com. If you are one of our partners, complete traders or professional traders, you can get access to my trade alerts with specific buy and sells and our pick of the week. Thanks a lot, guys. Have a great weekend, and I'll speak to you soon.